money is getting tokenized. Every single banking core needs to be upgraded. Every single Swift terminal needs to be updated. Every single thing that moves or touches or exchanges money has to be upgraded. And that's the magic of what we want to do, because there's a massive opportunity to do that. Anytime there's a payout, for anything. It could be for insurance claims, it could be for creator payout, it could be oil and gas royalties. There was a lot of regulatory uncertainty. A lot of people that had tried to solve this problem, they were just not succeeding. We were naive enough to listen to our customers, and we were ignorant enough to not know that this was going to be hard. If we're right about how we do this and we stay in the market long enough, we will have the opportunity to be part of a much larger global narrative.
I really believe founder product fit matters a lot. Are we the right team together to take on this opportunity? It was clear to us that we were, and we made the decision to go all in.
Welcome to Escape Velocity, a podcast to unpack the 0 to 1 journey of founders who have built successful, scaled businesses today that we all admire. Going from formation stage to product market fit is often the most messy and least linear part of the startup journey. In this series, we dive into the early parts of the founder journey and understand the lessons of successful founders who have gone from an idea to finding product market fit and beyond. Welcome to Escape Velocity. Today we have a special episode with our portfolio company, Rain. Rain is one of the fastest growing stablecoin infrastructure companies and most recently raised a Series B of $58 million earlier this summer. Today we have the co-founders Charles Knott and Farooq Malik with us. All right, guys, great to have you on the show. Thanks for making this happen.
Thank you for having us.
So I want to jump right into it. So we had the chance to partner right at the beginning of Rain, but before we start talking about the company, I want to dig into your guys' individual backgrounds. How did you end up going on this entrepreneurial journey? Maybe Farooq, you can start, kick us off. How did you get into thinking about being an entrepreneur, wanting to become an entrepreneur?
Yeah, I wanted to be an entrepreneur. Tried different entrepreneurial pursuits since I was like a kid. I started a company when I was 15, making websites for sort of businesses, and then have tried different things over time, and then eventually kind of settled into like a career, right? I was in finance for several years, and I kind of just got bored of, the day-to-day life of working at like a larger institution where there's nothing really at risk. There's like organizational inertia, everybody's going to get paid. And I wanted to do something a lot more interesting. So I ended up taking a sabbatical, working at a friend's startup for a few months, just to kind of get in touch with what it feels like to work at something early stage. And then I decided, you know what, I'm going to start something on my own. So I ended up taking, I resigned my position and ended up building my first company. And as most people probably know, when you're a first-time founder, there's a lot of things you don't know. Even when you're a second, third-time founder, there's a lot of things you don't know. But that company, for a variety of reasons, just didn't work out the way I expected it to. And so I was in the process of figuring out, okay, I want to try this again, but I don't want to do it alone. So I was a solo founder last time. And I joined the On Deck community, which was like for founders, like folks that are looking for co-founders or ideas or people to bounce ideas off of. And that's when I met Charles through the On Deck community. And we, I think, both connected on how we didn't want to build a large business. We wanted to build something where we could just do a hackathon for over a weekend or whatever, and build something that could generate potential mailbox money, right? Yeah. And then we ended up building that together. And so, I'll let Charles kind of introduce himself as well, but we started building that, and from there, that was the beginning of starting to learn more about the stablecoin ecosystem, the challenges with the interoperability, and starting to get more exposed to this like massive problem set, but also this opportunity set of this new technology layer that was getting developed, or was it already existing, but was struggling to gain adoption on a crossover basis. And as we just had more conversations with potential customers or people that were engaging in this market, we just learned, wow, this is like a large opportunity. It's already happening, right? It has its own momentum. And people are asking very targeted questions about, hey, how do I actually use this? How do I pay for stuff? How do I do things? And it seemed to us that it had already gotten to the point where you can actually just start solving those problems. And these people had budget, they had intent, and we could actually take advantage of that with the idea that over time, more and more people will start using this. And the best time to start something that is changing the underlying infrastructure of a market is the day you figure out that that's happening.
Yeah.
Because a lot of times, right, the fact that you started then is one of your biggest advantages.
So Charles, jumping to you, tell us a little bit about your own journey. I know you spent time also working at another startup which had a successful exit. Share a little bit about what got you into the world of entrepreneurship. Tell us a little bit about your first journey, and then we'll jump into Rain as well.
Yeah, so ever since I was young, before I even knew the word entrepreneurship, I was really interested in building and inventing things, starting things. Taught myself how to program in middle school, and then in high school, I started my first startup, which was when you always build stuff to solve your own problems. So it was a college admissions, a website, crowdsourcing all of my friends' college data and like providing dashboards on top of that. And then after I graduated Stanford, started my second startup, bootstrapped that business, and then eventually sold it to Intuit. And then I was at Intuit for 4 years, which was like a good experience learning how to scale financial products. And after 4 years, I left, took some time off, and joined the On Deck Fellowship, which was where I met Farooq.
Amazing. And we actually met originally at Stanford, and then again after you sold your company to Intuit. I remember it was early in the idea maze, and you similarly were thinking about a lot of different ideas, small, big, intermediate. Tell us a little bit about where you started that journey from, and then how did you start to get to a place where you and Farooq started to mind meld?
Yeah, it was a very windy idea maze. So my last startup was in the contractor management space, and when I joined Intuit, I was part of the self-employed team, building tools for contractors and Uber drivers, basically anyone working for themselves. And when I left Intuit and I started thinking about new startup ideas, that was the first space that I kind of naturally explored, is new tools for contractors. And through that was actually the first time that I got excited about stablecoins, because contractor payments was always a big challenge for us at Intuit, especially as Intuit tried to expand into new markets and new geographies. And I saw stablecoins when I first learned about it. It's like, oh, you have all the benefits of digital currencies, but none of the downsides of the volatility. I thought that was like, just blew my mind. But I ended up not exploring anything in stablecoins at that time. And then the COVID hit, like as soon as I started to really go deep into the idea maze, and I went deeper into the small business space, eventually started thinking about the future of work and future of small businesses, and thought about like micro SaaS, and how this was before really ChatGPT, but it was clear with like no code tools that the cost of building software was going to go down. And I thought that we're going to just start seeing more and more vertical SaaS platforms, vertical software platforms. And that's really when Farooq and I connected. He had this one idea. He had this domain, signandwire.com, because he's like a domain hoarder. So he has like a ton of domains. And he was just pitching me on like, oh, I really want to do this idea of like, checkout and documents combined. And I was looking at micro SaaS space. Okay, this is a perfect like micro SaaS side business that we can work on together. And that was really how we just kind of organically started working together on an idea that kind of converged on our two interest path, and stumbled onto kind of Rain through that.
Yeah, also, it helped us build a rapport working together, right? Like I think a lot of times for founders that are starting to work with somebody on a co-founder basis, the first time they're working together is on high stakes, right? So they've raised money, they're doing stuff, and the stakes are a lot higher. And so for us, I think it was really helpful for us to start working together where we could demonstrate our own unique skills that we were bringing to the table. And we grew to appreciate that together, right? And we discovered the expanding idea opportunities together, and then we chose to dig in together. And so we've been able to take advantage of being able to grow our relationship together as we've grown kind of our working opportunity. And eventually with Rain, we've been able to kind of have a great working relationship, largely because we got a lot of that early experience together when stakes were low, and we learned that, hey, if something's gonna get done, we can trust each other to do it, right?
Yeah.
And one of the biggest things that we've seen, like I've seen, right, with other folks, my friends and their companies sometimes, is that building that trust with your co-founder and the people you're working with is actually really paramount.
Yeah.
And a lot of people, they just never invest the time in getting that right before they start. Right. And then it just compounds these like problems, and then eventually, creates friction. And, a lot of times, right, like companies die because the people that were building it have challenges working together.
I love that lesson. And what was it, you think, in those early days that you saw in each other, we were like, hey, this might feel like a fruitful thing to at least try out? And then when did you feel like, hey, we can actually do this together? Like, what was there something where you're like, hey, trust is obviously starting to build, et cetera, but is there a moment or a lesson where you can kind of say, hey, this was the time where I said, okay, I can work with this person now for a long time?
I think part of it was like when we set up to work on the side project together, we actually did it the right way, right? So we set up a company, we granted shares. And so everything was ready as if we were planning to do something much bigger, right? And just by having that in place and doing it correctly, we were able to solve a lot of that initial problem that happens when you're like growing into, oh, is this my idea? Is this your idea? Who should get more? Who should get less? Like we never ended up having to deal with that, which was a big part of discovering these problems together, figuring out, okay, how can we actually solve this? And we always approached most conversations with potential clients or people that were complaining about stuff from a place of like discovery. We were like just trying to understand, what are the elements of this that you think is painful? What are the elements of this that you think are solvable? And how would you actually want to solve it? How would you want to engage with somebody that's trying to solve it, right? And so just by listening to people from that perspective, we then went back and said, well, maybe we can, like, we have an idea on how to actually fix this. And then we just started working together to like build it and like fix it.
Yeah.
So
Yeah, I think early on, like Farooq said, we weren't really trying to build anything big. We were just having fun and like exploring stuff together. But through that experience, it was clear to us that we had like complementary skill sets. But there was really nothing yet that we felt passionate enough to go all in after. And it wasn't until the opportunity of Rain came to us that we really decided to make that commitment, because I really believe in not just like product market fit, but like founder product fit matters a lot. Like, are we the right team together to take on this opportunity? And I think with Rain, it was clear to us that we were. And that's like, it wasn't until we really had that opportunity that we made the decision to go all in.
Yeah. And so tell me more about that founder market fit, because I agree with you, but how did you guys feel like you were best situated for what was coming with Rain before you even frankly knew the full formation of what that was going to look like?
well, I think part of it was as we were trying to figure out, okay, these are problems that people are bringing up. How can we solve these? There was some nuances that we had brought with our own experience, right, into the space that like from his experience at Intuit, my experience in like more traditional banking, where we were like, well, there's ways to kind of slice and dice this or do a solution architecture that solves a lot of the problems of everybody that's done it previously without success, and then potentially try a whole different way of doing it. And maybe that's going to be more resilient with this, like the way the market was at the time, right? So with stablecoins in 2021, there was a lot of regulatory uncertainty. I mean, there's still, even today, there's like some regulatory uncertainty. Yeah. And what we realized was that a lot of people that had tried to solve this problem, they were not succeeding because they were all doing it the same way.
Yeah.
Right. And so we were like, well, what if we can explore a different way to do it? And by simply being different, we can be more resilient because it's just not the way that everybody else does it.
Yeah. Yeah.
And so, I mean, and we worked on that together because he had experience like with the technical side of it. I had some experience with how do you put different regulated pieces together in a way where you can solve a lot of the uncertainty and make it a lot more clear on where we stood. And that ended up being a huge competitive advantage for us because we were able to stay in market, enter market, stay in market, build in market for several years without anybody coming in and saying, hey, you got to wrap up and try to do something else, right?
Yeah.
And so that was a huge value add for us, and we wouldn't have gotten there if we didn't have that like level of professional experience, or just intellectual curiosity on like are there other ways to do this, like instead of making the same mistakes that we saw everybody else make.
Yeah, incredible. And you guys were both at large organizations, whether through acquisition or by choice, Intuit, large financial institutions. Tell us, what did you have to shed before you started this journey? What were the things that you had to unlearn, or maybe some lessons that you even took from those organizations that are still helpful and value add to what you're doing now?
Yeah.
Yoo-Naut.
I mean, for me, it was really important to just relearn that if we don't do it, it's not going to get done. Right? A lot of times at larger organizations, if you don't do it, a lot of times it's not even going to matter that it didn't get done because it wasn't mandatory anyways, or it didn't move the needle anyways. And so for us, and like in my journey here, is one of the most important things has been just remembering that if I don't do it or he doesn't do it or we don't hold each other accountable or our team accountable, like it's just not going to happen. And if it doesn't happen, that's going to be why we didn't succeed, right? And really getting out of that like large enterprise mindset and start thinking more tactically was very important. And then the other thing is I think the way that we've tried to build our business has been with the idea that eventually at some point our opportunity is going to intersect with our past, right? Where we are going to start selling to larger and larger enterprises, understanding why really good solutions didn't get bought at where I used to work, or really good solutions didn't get bought where he used to work, is going to be really important when we start selling institutions to buy our stuff, right? And so how do we start every day where the inevitable conversation with like some purchasing committee or procurement team at some like multi-100 thousand person company, how can we actually get leverage for that conversation without having to do it like the week before and scramble, right? Like how do we actually build that muscle every day so that whenever that happens, we've been in the market longest, we've done the most stuff, most people trust us. And so we're able to actually credibly show up and say, not only is this new, it's really not that new. And a lot of people already use it. And that lets you kind of convince folks to try something that otherwise they might find to be, you know, a bit too scary or a bit too expensive or whatever it is.
Right. No, it's great. And Charles, how about you? Similar?
I was pretty fortunate actually in Intuit because as part of the acquisition, we entered into like a startup within Intuit. So we were this startup within a startup. So we were very insulated from, I think, a lot of the traditional problems that you have when you join a big company. And then through that experience, I actually was able to learn a lot about how do you move quickly, grow and scale rapidly in building a financial technology product. But previous to Intuit and previous to that startup, I was at Microsoft out of college. And a lot of lessons there on, as I was part of the product management org and learning about just some of the downsides of building a very layered hierarchy. So at Rain, like we have a pretty flat structure, and we really trust our team and give our team a lot of ownership and accountability. And then part of that was, you know, from my experience at Microsoft, seeing the opposite, where you know, everyone is like you're in charge of like such a small thing, and there's like so many cooks in the kitchen where it just moves really, really slowly. So I would say more of my time at Microsoft was like the anti-learning, and then my time of Intuit actually influenced a lot of the org structure we currently have.
Amazing. So, okay, back to Rain. Yeah. It's late 2021. We're in sign and wire days. What's happening? How do you realize that there's this massive opportunity? You guys started to hint at it, but tell us a little bit more about the discovery process of where there was a real opportunity.
I think one of the things we've just learned, right, is sign and wire customers were signing up, and then some of them came to us and said, hey, I'm an investor, because one of the first use cases for sign and wire was angel investing. Yep. So we had a document generator that made a safe note, and you could send a clickable link for somebody to connect a wallet or to log into their bank account and send you money. And so we had an early customer come in and say, hey, I have an investor who wants to invest in USDC. And we were both excited about this like space anyways. And so we ended up, I think Charles ended up building it in a day, like just a wallet to wallet transfer. Yeah. And I remember the first transaction that went through, it was just immediate, right? And I think we both looked at each other and we were like, well, this is so much better than all the other transactions that are going on. And that's when we were starting to think about, okay, well, this is meaningfully better. This is like a step change in the technology for money movement. You don't need a financial institution on the other side to facilitate this. This is actually person to person. And it's instantaneous, it's global. You can send the money globally in a few minutes, right? And that's when it started clicking in our head that like, hey, this is what the future of all money is probably gonna be. Yeah. Where this is solving so many problems that institutions have not been able to solve for a long time. And one of the things we always talk about at the company is that money, cash is instant, right? So I give you a $10 bill, you have it, and I don't have it anymore. But we spent like the last several decades making money more and more complicated and slower and slower and slower, and more it requiring more and more capital, right? So like when you do a transfer now, there's like $3 or $4 behind the scenes moving around to move $1. Yeah. And it just clicked in our head like, oh, if money becomes digital and instant, you can actually fix a lot of the plumbing that has had to grow the way it has just because of necessity. And that was kind of the aha moment for us, which was, okay, now what? Like, how do we actually take advantage of this thing that we see is happening already and this is gonna be the future?
Yeah.
And so then we work backwards from, okay, who has this problem today? Who interfaces with this stuff today? Where can we get started today without having to worry about like what's going to happen when banks start using it, right? Like, who uses this today? Who needs it?
Right.
And how do we just give them something that we can actually just get stuck into this so we can learn more about it and build all the interoperability?
Yeah, it's interesting because you guys had big idea, but you started actually very granularly of like, hey, how do we get this into market, right? Because first iteration of Rain is Rain Cards. Yeah. Tell us more about that. Like, what was the design choice about where to start, how to build something structurally to get to this bigger vision and opportunity?
Yeah, like early on, it was clear, we had strong conviction on stablecoins. We thought they will eventually be ubiquitous. But the biggest thing, like when we actually started using it, is the holding back adoption was really that lack of interoperability. Like you couldn't really use it anywhere, even though you can send it and someone's going to receive it instantly for very cheap. So we wanted to tackle that problem right away. It's like, how do you actually make stablecoins usable, spendable? And we realized cards were the perfect initial wedge. Like if we can make stablecoins spendable on cards, you unlock acceptance on like tens of millions of merchants globally. And that just makes it even 10x better experience than it already is. So we decided, okay, let's focus on cards first. And early adopters for stablecoins were two main ones that we had identified. One is this emerging market use case where people are using stablecoins to get access to dollars. But the other one is this kind of crypto native business use case. So there's a whole plethora of DAOs and crypto funds and protocols that were raising money on chain, earning money on chain, that were basically underbanked. One, because of regulation, two, because of technology. They have billions of dollars in a wallet, but they didn't have a bank account. They didn't have a way to easily off-ramp it, easily pay for their SaaS expenses or their travel expenses. So we decided, let's actually go after this market. One, their expenses look very similar to traditional business. The product looks very similar to a traditional spend management product. The only piece that we'd be able to focus on is building this new settlement infrastructure on chain. So that was in end of 2021 where we decided to focus on this initial use case. And I think people would just say like, Rain is just credit cards for DAOs. And that was like a fine like initial focus for us because we were able to hone in on a very core ICP that had this hair on fire problem where we would do demo calls with those initial ICP and within the first 5 minutes, they just got it. It was like, I needed this like yesterday. Yeah. So it was great to have that kind of early product market fit, even though the market wasn't very large. So yeah, I think identifying that early product that early market, being able to iterate with a core set of customers that was still growing was really key to being able to develop the platform and be able to get early traction in a very nascent market.
And how did you guys think about, I know, so when we met, you guys had a Notion document with a vision for what Rain could become and the idea and the thesis, some early data points. When did you know that this was the time to fundraise? And obviously it was a little bit of a crazy time because it was the sort of coming to an end of a crypto moment in the end of 2021, beginning of 2022. How did you think about now we're ready to pull the trigger on fundraising, we should get started more formally around this idea and raise finances around it?
Well, we built a POC, right? And we took that to the people that were complaining about this problem. And as soon as we showed it, they were like, we want this. How do we sign up? Where's this login? Where's the sign up page? And that's when we were like, okay, well, we should probably figure out how to do the hell of that. Yeah. And it worked. The POC worked. Everything worked. It just, we didn't know what we didn't know about how do you onboard clients? What are we supposed to be doing? All that stuff. And so we raised capital because we wanted to start accelerating the speed at which we could iterate and develop the product and get it out into clients' hands. And, you know, even our first website, like I think I made the logo, like I kind of moved the boxes around. And then, you know, we just shipped first. So we just shipped fast and then worked backwards to kind of improve the product over time. And I think one of the things that we were lucky, I think one of the things that ended up working out very well for us was that because we just shipped before we were ready, we got something out in market, right? And so it helped us with the POC, it helped us kind of build credibility with investors to say, hey, these people can ship and they can deliver. And we also had these like clients that wanted the product. So we were able to say, well, there's at least some interest in this market segment. And at the same time, a lot of people were interested in what was going to happen with on-chain organizations and things like that. And so there was this like, tailwind in the market as well about like our customer segment. And so it really helped us with unlocking that capital, and we ended up working with you for the seed round. And those resources actually helped us actually deliver the product. I think we launched our first customer maybe 6 weeks after we raised the seed round. And then we just never looked back. Like we just had one customer, they were very happy. They realized that it was new, that it didn't work all the time the way they expected it to, but it worked. And it was better than having nothing. And this organization had tens of millions of dollars, and then they were all really connected to other people in the industry that all had hundreds of millions of dollars. And then eventually we just had more and more people using the product. And we also ended up being very fortunate because I think one of the things we did early on is we chose the business segment rather than the consumer segment, because on the business side, customer spend is higher. So break even on customers eat faster, and the compliance obligation is lower because the risk level is lower. And so we were able to kind of grow in that market. And the other thing that ended up being a great thing for us, or a great element for us, was that many of our customers for the B2B product had consumer-facing products. And as the market started evolving, many of these people started coming, even before we were ready, saying, hey, can we actually do this for all of our customers? And we heard that over and over and over again from from our customers then. And that's when we were like, is the market really ready for us to do this for others? And we thought it was going to get there at some point, but it started happening a lot faster than we expected. Especially when, the market overall internationally was not the best from like 2022 to 2024. It was just not great. And so we were actually quite surprised at both the existing customer demand that we had, and then inbound from our existing customers about servicing their clients. And it ended up being a very good outcome for us, because by servicing their core team members, we actually built a lot of trust, right? They knew it worked. They'd used it for several years before they introduced us as a solution for their clients. They actually had a great deal of conviction that these people are reliable, the product works, it performs how it's supposed to, and we can trust that we put this in front of our customers, it's going to be a good experience. And that really helped us kind of continue scaling.
So you guys were finally at a point where you put your thoughts into a Notion document, decided to think about a seed round. What made you go into thinking about how much you wanted to raise, and what were the type of partners that you wanted to work with?
One of the things that we wanted to optimize for on the partner selection side was somebody that was going to be there through like the good times and the bad times, right? And somebody that we could rely on to provide us tangible, honest feedback on whatever question we were asking. And when we got to spend more time with you, I think we found that person. And over the last few years, I think that you've been instrumental in helping us kind of think about various business things that we've thought about over the last several years. And that was a big part of picking the right partner. I think the other side of it was finding and putting together the right group of people around the company. And so we picked Lightspeed because Lightspeed was able to, that had like a good crypto pedigree, but also had access to a great person like you. And then we also wanted to make sure that we selected strategic partners where we could unlock asymmetric opportunities, right? So we picked Coinbase and Circle so that we could have a business relationship with them from the early days. It ended up coming in very handy as the company grew. We needed access to folks at those companies to help us tackle a couple of like business problems over the years, and building like the coalition that was able to come with us this whole way was very important. And we ended up selecting Norwest as a participant in that round. Norwest ended up leading our Series A. And so for us, it's always been about nurturing and building relationships with people that we admire and that we want to work with long term. And we've been fortunate to have made the right decision and had the folks that continued believing in what we were doing on a quarter by quarter, month by month basis, and were there to kind of continue encouraging us to think about the larger opportunity ahead, rather than focusing on, oh, this is not growing fast enough, or that's not moving quick enough, and really just give us the opportunity and the space to think about what we were doing from a rigorous basis, and then support us on additional capital raises, introductions to potential new hires. And we've been very fortunate to have had folks that have really rolled up their sleeves and gotten in there with us.
Yeah. It's interesting because you guys have had multiple phenomenal inflection points in the business and multiple points of product market fit. And I want to ask you guys, so founders always talk about finding product market fit, and maybe investors say it more often, unfortunately, but how do you guys think about in your own journey in that first phase, what did product market fit feel like? You talked about these early signs, people asking for the product, but like when did you know that for this first iteration you had it? And did you know at that point? And then I want to talk a little bit about what you mentioned about getting the hint for what came after that.
Yeah, I think product market fit, part of it is, can you convince somebody to use the thing, right? And if you don't have to do any convincing and they're just asking to use it, I think that's one piece of product market fit. The other piece of product market fit is when they start using it, do they use it more and more and more and more? And so for us, it was really about seeing that our clients were not only using it more and more and more and more every single month or every quarter, they were also introducing it across their entire network and saying, hey, this is what you should use. This is the best product in the business. And they were like sending photos of our product to and just chats and others, and people would send us back it and be like, oh, I went to dinner and so we used your product. And so it was really nice to be able to see that level of engagement. And then the main thing I think that also helped differentiate ourselves is that we are very hands-on with our customers to make sure that, we just didn't invest in any customer support, which is probably not great. But one of the positive elements of that was that all of our customers knew that they could just message us directly on Telegram or Slack or whatever it is, and we would help them figure out how to solve it. And there's nothing too big or too small, and we just ended up doing it. And so that also built a lot of goodwill where, especially when you're handling people's money, they need to feel comfortable that, hey, you're responsible, you're responsive, you'll solve a problem. And we've always tried to do the right thing for our clients to make sure that they are happy and that they are in a position where they're continuing to grow their relationship with us in whatever capacity they're working with us, without having to worry about, us dropping the ball. I mean, everybody drops the ball for once in a while, but that was a big part of our strategy. And then as we've built more products, those different things have also had their own product market fit moment. And intellectually, right, I think as a founder, whenever you're pitching ideas, it's really important to talk about this is the immediately accessible, addressable market for what we're doing. But if we unlock this is a node on this much larger opportunity. I think everybody talks about that, but I think a lot of companies, they kind of lose track of what they were doing, right? They do this thing and they're like, this is going really well, so let me just triple down on this. And I think if your goal is to try to build something big, you have to maintain vision alignment, right? If you're not aligned on the vision of what you set out to do, it's going to get very easy to get lost and say, this flywheel is spinning, so I'm just going to triple down on this. And what happens with a lot of companies, I mean, this is, and luckily for us, even though we've deprioritized certain elements of our business, we've been fortunate because we had the vision alignment of what we were doing in the first place. So we've been able to move to significantly larger addressable markets, unlocking on the back of everything that we're building. So we didn't have to build anything new to do this stuff that we do now. It was the same stuff packaged with different developer docs, right? That's pretty much what we sell.
Yeah. So tell us more about that. You guys unpacked, basically V1 was corporate cards in this more digital version and in digital infrastructure. V2, not to lead the witness, but tell us more about where that led you to. What was that second concentric circle as you think about expanding the market? And how did you know that there was enough pull at that time to start thinking about that?
Yeah. So I think one way to think about it is we had product market fit early on. And our challenge became, how do we expand the product to keep expanding the market while maintaining that product market fit? And it got to a point where the size of the market that we had initially addressed wasn't growing fast enough for our ambitions. And we had to figure out, how do we expand TAM for this product? Because we do think there's strong product market fit. There's other markets to go after with this core technology that we've developed. And there's a few paths that we saw. One path was going deeper into this B2B space. How do we actually go into emerging markets like Brazil and offer a business bank account built on top of stablecoins, or how do we do that in Nigeria? And there was another avenue of like, how do we actually just turn this into a platform where we can index across all the opportunities that we're seeing in this space? And really our customers are the ones that chose the path for us. Like we did small experiments early on to kind of see if there was demand. Like we announced a partnership with a wallet provider where we would be providing cards for anyone that's using that wallet provider. And then through that, we got a ton of inbound of people that wanted to sign up for that product, which we hadn't built yet. Like we didn't even have API docs for it yet. We had maybe another Notion page of what it could look like. But there was enough demand, and that was like 2 years ago. There was enough demand. We're like, okay, actually, we should go and build this. So yeah, it was really just listening to our customers and figuring out what are the right experiments to run to validate what the future direction should be. And then once we did that and started more formally announcing what we were working on, we just got more and more inbound, to the pull just became stronger. And our challenge became, how do we pivot the business so that our focus is on this bigger opportunity while still maintaining the other opportunity that was driving all the revenue and still providing a lot of valuable insight. So that was kind of the transition we had to do 2 years ago, and it probably took about a year for us to make that transition.
Yeah. It's really interesting because we're in this moment right now where stablecoins, maybe after AI, is the biggest talked about theme, right? And you guys got started 3+ years ago at this point and kind of are in this perfect position and have been in this perfect position to take advantage of what's happening. How do you guys think about what's happened in the market and like where you are today, and maybe talk a little bit more about what the product is up to today to give, you know, people full context on why this sort of exact match is happening at this moment, and looking backwards, how crazy is it that this journey started 3+ years ago to meet this moment today?
I think one of the core things that we focused on at the beginning was the clarity that this is money, right? And eventually the world is going to wake up where this is just money, and this is the next iteration of what's possible with money. I think a lot of people got caught up into stablecoins, CBDC, tokenized money, whatever you want to call it. And for us, we were just thinking about it as, you can call it whatever you want, but people are going to continue using money the same way. They're going to buy coffees, they're going to pay for airplane tickets, they're going to pay rent. And if we can just start focusing on what you need to do, and even at the time when we started, like the stablecoin market cap was like $100 billion+. That's a large market, right? And sure, a lot of it was trading use cases, et cetera, but one of the fastest growing segments, even during the bear market years, was consumer payments or cross-border payments, or individuals holding on to stable coins as a replacement for dollars in a shoebox under the mattress. Yeah. And that's when we were like, well, we have to start accelerating, because the world, from an adoption perspective, people are already voting with their wallets. Right. They're already holding this money. They're already transmitting this money. And so we have to now speed up, because we saw the inflection point happening. And when it's easy to say now, though, we were right this whole time. Like it took a lot of, belief in what was going to happen to think about it as, hey, eventually it's going to come. And as long as we stay in the market, we continue iterating and growing the variety of use cases that we can power, or the things that people can do. In some capacity, this is going to become a thing. Yeah. And that's what's ended up happening, right? Like the regulations change, and very easily could have gone the other way, right? Like we could have another 4 years of regulatory uncertainty. The government could have decided, hey, all of this stuff is illegal. We're lucky that they didn't do that. Yeah. But at the same time, if you want to make a consensus bet, sometimes you have to make a non-consensus bet. Yeah. Before the consensus is clear. Yeah. And that was a big part of what we wanted to do, which is that if we're right, and we're right about how we do this, and we stay in the market long enough, we will have the opportunity to be part of a much larger global narrative. Yeah. And if we don't, and if we're wrong, then we tried something difficult, and there's no downside risk, because we'll always have done something hard and accomplished it to a certain degree, and we'll be able to do whatever we want next, right? Like, I think a lot of founders, or a lot of early stage team members, when they're thinking about early stage companies, they're like, well, this is a risk. You might fail. But the risk is really that you will have to go back to your old job getting paid more money. Right. Like, there's no risk. Right. The risk is that you will have done something no one else has done. Right. and people will then pay you because you've done the thing that no one else has done. And so there's actually no downside risk of taking risk in an early stage startup, as long as you're doing things, as long as you're building things. And I think the only mistake a lot of founders make is that they try to be too secretive about what they're doing. And the problem with being too secretive is that if you fail, no one knew you did it. And the hardest part about, like, the most important part of doing things is making sure that people know that you're capable of doing it, and that you have the conviction to do it, and you have the follow through to accomplish it. And if you can just do those things, you will increase the opportunity for success in whatever capacity, even in failure, right? And so I think that's the most important part of being a founder, or even an early stage like team member, is you just have to take the risk, because the risk is that you'll get paid more doing something else.
So for Rain itself today in 2025, you guys are now starting to tell your own story, and I'll do a little bit of it for you. So one of the fastest growing companies certainly out there right now. You guys have publicly now, just this calendar year, raised twice in the span of 6 months. Tell us about, where is Rain today? What are you guys doing? Help educate people who are listening who might not have heard of Rain before on what does the evolution of Rain look like today, and then give us a hint into what's coming in the pipe in the next 6 to 12 months.
Yeah, so the evolution that started 2 years ago was really, how do we become this platform to power the future of financial products built on top of what we think is the future of financial infrastructure, like stablecoins and the blockchain. Our core has been cards, but we're really, as part of the Series B, has expanded our entire infrastructure offering to be everything that we're hearing from our customers that they want when they're launching a program. So that's like virtual accounts and on-ramping capabilities to be able to fund a stablecoin balance, and wallets to be able to store those stablecoin balances, and then off-ramping to be able to move back into fiat for all the use cases that are still not crypto native. And then of course our core card issuing infrastructure to be able to spend on top of the existing Visa rails.
And so today, some of your customers include some of the largest, both digital money movers as well as traditional companies. Tell us a little bit more about one or two examples of the types of customers you're working with, how you're empowering them today.
Yeah, I mean, we work with customers of every type, doing all sorts of different types of programs. So we have customers that do high net worth charge cards, so to compete with sort of the affinity card market, or like the high end card market, right? The back end of all of that infrastructure is stablecoins, but a user swiping a card or using that anywhere else, the user experience is the exact same as everything else. Then we have like stablecoin neobanks, banks that are providing, or apps that are providing a US dollar linked account using stablecoins for people in countries where they don't have access to dollar balances. And that's one of the fastest growing segments. We have customers that have built out freelancer payment apps where you can connect it to Upwork or Fiverr, and you can receive money into a US account, and then those funds are then held in stablecoins for you to be able to swipe and spend on the same things that you would normally spend. And what we've learned, right, is that US dollar is the global currency, even today. And most things that people buy cross-border are priced in dollars. And so if you're if you're a gig economy worker in Brazil, you are probably, you're a designer, you're probably paying for Adobe or Figma, right? And those transactions need to be paid in dollars. Your card in Brazil from your local financial institution is going to charge all sorts of fees to actually spend that money. Right. But if you can have a dollar product that is spending dollar stable coins, you can save a lot of the money that you would normally be paying in fees. And so a lot of our customers come to enable that use case. Or they might be a global marketplace and they want to embed a globally available financial product across their customer segment. I think one of the big things that we've been learning, right? We talk to CPOs of companies, and one of the things that they've shared with us is that we're a global business, but we've never had a global partner. And having a global partner is very important, because if you're a product-oriented company, you want to make sure that your customer in market A has the same look and feel of the product as customer market B. But it's been very difficult to do without the infrastructure we've built, because before Rain, you would have had to go sign partnerships in multiple markets. You would have to build technical integrations into multiple, APIs for all these different markets and all the partners that you're working with. And then on top of that, every single product that you issue would look and feel different, right? Even from just the piece of plastic you're holding in your hand, potentially from a card basis, or even from like how the transactions are settling from a fee basis. And so a lot of people just never built any of that, because it's not because they didn't think about it as an opportunity. It's just that it was very difficult to execute because it would have required so much development time, so much thinking time, so much planning. Whereas now, in the span of 4 weeks, anybody can embed a product servicing almost the entirety of their global customer base with a single API, right? And that's awesome. That has nothing to do with stablecoins, right? Like but then we use stablecoins to provide lots of utility. We can settle 7 days a week. We can drive cost savings for our partners. It's just a lot more efficient to work with us than to work with anybody else. And not only from a working capital outlay perspective, but time to market. We can take you to market before many other alternative vendors can even sign their MNDA.
Yeah.
Right. So like we'll get you live with customers before you've even gone through the first step of a sales call with anybody that you would normally try to work with.
So if I'm a C-level exec at a Fortune 500 right now listening to this, and all I've been hearing is AI is going to change my workplace. Now I'm hearing maybe stable coins or digital currencies are coming. You kind of hinted at some of this, but how do I think about why is this important for me if I'm a C-level exec at Geico or Ford Motors or Airbnb? How do I start to think about and wrap my head around making an ROI case around moving to this stablecoin or digital money stack?
Yes, like stablecoins are a way to upgrade your financial infrastructure without spending a ton of money re-architecting everything. And one of the biggest use cases for stablecoin efficiency is that anytime there's a payout for anything, right? It could be for insurance claims, it could be for payouts for creator payouts, or it could be streaming royalties, whatever it is. It could be oil and gas royalties. Anytime you're sending money somewhere, that has a cost. And using stablecoins turns that cost, using the RAIN infrastructure, turns that cost into a profit center. Where now you're not spending $5 to mail a $3 check. You can actually just send an email, issue a stablecoin backed product. You can disburse a stablecoin through a mass payout to all of the people that need to hold it. And you just give them instant access to the money. They don't have to wait for it to come in the mail. They can get it on a weekend. They can spend it on a weekend. They don't have to worry. Like you move outside of this like working day modality that a lot of people are stuck in. And even from like ERP, accounts payable use cases, we talked to a lot of vendors who are saying, hey, I have to wait 3 days for the ACH to land before I can actually send the payments to my vendors. With us, you can just fund stablecoins instantaneously and you can disburse the payment 5 minutes from now, right? And now you just don't need 3 days of float sitting around at every single partner financial institution. And I mean, this is aside from, other stablecoin use cases. I think people think about stablecoins as this is cross-border. I mean, this is for, internationally SWIFT payments are gonna be cheaper. The reality is that for us, the vast majority of our customers today now are traditional players that are embedding stablecoins in ways that if you were to look at it or feel it or use it, you wouldn't even know.
Right.
And that's the magic of what we want to do. And that's what every Fortune 500 company should be thinking about is how do we actually use this to get efficiency, not as a gimmick, but as a way to actually turn cost centers into profit centers, because there's a massive opportunity to do that.
Yeah. I love that framing because I think so much of the original promise of crypto was, we're changing digital money, et cetera. But the reality was you couldn't go buy the cup of coffee when you wanted to have a sales meeting, which is where RAIN started. And now as you kind of think about the use cases that you're powering, a lot of it is how are consumers already or businesses already engaging, and can we make this a more efficient, less cost-centric type of equation for these folks? And so the actual behavior on the top end isn't changing, but the underground infrastructure that you're powering is completely transforming the equation behind the scenes. So tell us a little bit about where we are right now in your mind about stablecoin adoption. We obviously hear a lot about it in the ecosystem. Where are we on this journey right now as a industry versus what might be happening in the news?
I think we're still in the early innings. Like a lot of the adoption you're seeing is in emerging markets. A lot of the businesses and startups that are building in the space are still pretty early stage. What we're excited about is we think in the next 12 months, you're going to start seeing one, mainstream adoption. Two, you're going to start seeing these global platforms, these Fortune 500 companies starting to adopt stablecoins or starting to ship stablecoin products. And once that happens, that's really going to accelerate adoption. And then we're going to reach a point where there is this critical mass of people interfacing and interacting with stablecoins. And you stop thinking about on-ramping and off-ramping, and you start thinking about what are stablecoin native experiences now? when you can assume that a merchant can accept stablecoins, and you can assume that you can pay for rent in USDC, or you can pay for your tuition in USDT, like that really changes the types of products and experiences you built versus when you're thinking about, okay, how do you get someone into stables? How do you get them out of stables? So that's really what we're excited about in the next 12 months is that enterprise adoption, that mainstream adoption, and then the new set of experiences you can start enabling once that happens.
And a lot of that seems to be coming off the back of recent regulation, right? I think we're seeing this current administration take a pretty, at least forward-looking stance on where stablecoins could go and broadly in digital currencies. We've seen things like the Genius Act get passed. Curious, how do you guys think about the state of regulation? How's that impacting your vision? You talked a little bit about it could have gone any direction. What do you feel about the current direction? How are you kind of taking advantage of this opportunity?
I think this is creating a lot of groundswell support for the industry, right? It's a lot of things are now possible that weren't possible before. It's still early. The regulations, I mean, the bills were passed, but regulations are still to come out. The rules for the road are still being developed. And I think this is encouraging. And as rules for the road are developed, there's a lot of people that are sitting on the sidelines that are interested in exploring this that will be emboldened to dive in deeper once there's even more clarity, right? Because it's still a bit of a gray area for a lot of folks. And so thinking about it from, you know, an institutional adoption perspective, once it's completely green light from everybody, think about the adoption that happens. I mean, even if you look at stablecoin adoption over the last 12 months, I think stablecoins in circulation has doubled.
Yeah.
Potentially more. I think it's definitely doubled.
Yeah.
But that's happening now. So imagine what's going to happen when everything is good, right? Like there's no question it's legal tender. There's ways to interface with it. Banks are, you know, issuing stablecoins or redeeming stablecoins, or they're creating stablecoin consortiums, or all of these things that people are talking about now, that as they begin to be real in the market, it's going to create additional opportunity, right? Because what I said earlier is that you can hold money in different ways. Everybody around the world has different currencies, right? There's coins, there's bills, but we all spend in the same way, right? And so as long as you're focusing on the spending side, which is what we're doing, the utility side, which is spending, sending, saving, you can actually make sure that all of this, like Cambrian exposure, or whatever stable coins, tokenized deposits, CBDCs, they all will have to come back into how people interface with it or use it.
Yeah.
And that's where we are. Really, we're in this like utility layer. And for us, I think that's a really important place to be, because everything needs to go through the pipes that unlock the utility for what you need the money for. And we just want to only stay there. We don't really care to move up or sideways or things like that, because the next few years is going to be a lot of experimentation from a lot of people that are trying to figure out what their place in the future of this world is going to be. And our bet is that, you know, our bet is on what happens next, right? So it's just whatever happens now is just going to be part of what happens next, which is the reintegration of everything back into the modern financial system on a going forward basis.
So almost by default, when you say the modern financial system, it's global, and Rain has been global since day one. Most people would give founders the advice of stay focused, focus on your local market, focus on your niche, but by default, you kind of had to be international from day one. Talk about just how were you able to accomplish that as a small startup in the beginning? Obviously now it's a different scale, but tell us about that global vision from day one and how you were able to achieve that.
It was out of necessity. A lot of our customers were global, right? The nature of regulatory uncertainty at the time when we were starting meant that a lot of people with tokens or protocols or, you know, crypto projects, et cetera, NFT projects, they had to domicile in all sorts of random places like Switzerland or Jersey or Panama, Cayman, BVI. And that meant that we, in order to service them, we had to figure out a way to service them. And so a lot of it was just out of the necessity of the early days, was just trying to figure out and iterate on what is a sustainable model that is lightweight enough where, you know, 9% company can do it, and is flexible enough so that we can make it possible to grow without necessarily having to tear everything down and rebuild everything again. Yeah. And we just poked around, and we came from, you know, we just knew that we didn't know stuff. And so we just poked around enough, asked enough questions, and ended up in a position where we were able to do what we needed to do at the time. And then we've slowly used that to expand our global footprint and the capabilities that we have, and get licensing in a lot of different markets and jurisdictions, and then slowly just expand on top of what we built several years ago. And it's helped that we've already done this work and we have a track record, because that's helped facilitate this like next phase of geographic expansion.
Yep.
And that's, we've just had to do it the old-fashioned way, which is you got to just start doing it, and then eventually you can do more of it, and then you hopefully you get the opportunity to do even more, and then here we are.
And how do you guys think, I mean, what's the interesting thing that's happened in the same time period as you guys have been expanding is that more competition has come in over the last 12 months as you think about this rise of stablecoins in this industry. But you guys have been doing this for many years now. Tell us just a little bit, how do you think about competition? How do you think about the noise now that's entered into this space more broadly? What do you do just on the founder level? How do you think about competition?
We've always thought about our opportunity as a technical opportunity, right? And that's driven our investment in the technology side. There's a lot of people that are coming into this market or have been in the market that have been very successful ignoring technology completely, right? They realized that there was gaps in the market for on-ramping or off-ramping or moving tokens from one chain to another chain. And that was great. And we're happy that people figured that out, and they made significant investments in that, made good products and had good outcomes even. But for our side, we were happy to grow slower because we wanted to continue building the infrastructure and iterating on that. We think that the only true moat that anybody can really build is a technical moat. Like a partner moat or a price moat, these are not really moats, right? Because in a long enough time horizon, maybe your partner that you work with from a banking partnership perspective may just decide, I'm actually going to move into this market now because the rules for the road have changed and I can do it, and I can get my risk people on board and start doing this stuff. So why would they continue platforming you if they can just compete and eat your lunch, right? Yeah. And so for us, it was really important to just build something technically difficult and continue iterating on that, because there's a lot of the things that we've built into our tooling that we knew to build because it didn't work the other way. Yeah. And so now if you want to build this and you want to compete with us, you have to relearn all the things that we learned over the last 4 years, and you'd have to speed run them all. And the only way to speed run them all is to convince people to use it when it is not reliable, right? And the challenge that companies have generally is that when you have an option between a partner where the solution works, is reliable, other people use it, has experience in time and market, and a solution that costs the same or is slightly more expensive, or maybe even cheaper, but has no volume, has no customers, has no experience. They don't know what they don't know. Which one would you choose?
Right. I want to talk to you guys a little bit about a tactical question. So we talked about competition. The other thing that's been happening with the business is obviously this incredible growth, which has created a lot of opportunities for fundraising this year, right? And all of these have been preemptive opportunities, which is obviously a great place for any founder to be in. But obviously you made a choice to raise money, and you also had time where you weren't raising money on purpose. And so tell us about the design choice as founders of when you thought this was the right time to raise additional capital. What are the things where you're like, hey, these are the markers I'm looking for to know that this is the time? And there were other times where I know you guys made the decision not to do that. And so curious how to unpack that and tell us more about that.
Yeah, Farooq and I have never been the type to raise just to raise. Like, my last business was fully bootstrapped. Before we even raised our seed round, Farooq and I had been working together for almost a year without raising anything. And it wasn't really until we felt like capital was the thing that was constraining our growth that we even decided to raise that first round. And that's still kind of the same philosophy that has taken us into all these subsequent rounds, is when we feel like capital can be used as a weapon and is the thing that's constraining our growth, that's when we feel like is the right time to grow. So for these last two rounds, it was clear that the opportunity was in front of us. If we were able to take more money, we actually had ways to use it to grow the business faster. And as long as that is still the question, as long as the answer is still yes to that question, I think we'll continue to raise. And when it's no longer the answer, then we'll stop.
Yeah. And a good mental model that we use is that what are the things we'll be able to do with this that we can't do today, right? And are there opportunities to buy time with money? because the only thing that is finite is time, right? And when times are good, you should try to buy the good times. And when the times are bad, you can kind of hold on and see how it's going to go. And so for us, it's been just about calibrating our business and our team in a way where we accelerate when there's an opportunity to. And we don't ever decelerate, but we always kind of take the foot off the gas a little bit when it's not so good, right? We don't believe in growing at all costs. We don't believe in sort of spending every dollar for the sake of spending every dollar. We think that you should be able to deploy capital efficiently, and all of it should be in service of revenue growth, right? So every dollar you put out the door should drive incremental dollars that are coming into the business. And sometimes you need money to expand partnership opportunities or expand feature set. And also for us, it's been really important to make sure that our clients feel supported as they grow. And so, building an org, building a support system for our customers and making sure that they know that we have the resources to support them for the long haul is also very important. And so a big part of the story this year for the A and B was really about demonstrating to our partners that we have the capability to actually take you the whole way. And we have the resources to continue investing behind you. And so as long as you're going to grow, we're going to be able to grow behind you and support you. You want us to go into market A or B, we'll go into market A or B. Yeah. And we have the resources to do that, and you don't have to worry about it. And so that's kind of our commitment to our customers. And capital is all in service of our commitment to our customers.
Yeah. And talk to us about partnerships. The other big piece I think about Rain has been these incredible partnerships you've built across the ecosystem, even with TradFi. Unlock, a little bit of your mindset around this. Like, how did you think about it from an early days? How do you convince a company like Visa, for example, to partner with you when you're just a small company? What were some of the tactics, tricks that you thought about as you were getting off the ground with partnerships?
I think a lot of credit for the Visa partnership goes to the Visa team. I think one of the things that they uniquely understood was that stablecoins present some mix of both an opportunity and a threat to their incumbent position in the market. And they were open-minded enough to engage with us in the early days when it was just a handful of people and a handful of customers, and start iterating with us and start talking to us and engaging with us to figure out like how can we actually help each other accomplish the vision that we had. And what was really helpful for us with Visa specifically is that we actually had a lot of vision alignment with them. Where they see the world going, we also see the world going that way. And so we were able to actually find a partner that we could build a relationship with and we were able to help them solve some of the business objectives that they had, right? And realize those on an earlier time horizon. Because at the same time, like, they're not immune from regulatory pressures and uncertainty, et cetera. And so I think they were in a position where they saw the writing on the wall of where the industry goes. But at the same time, they were stuck because the people that would normally be the marquee partner just weren't in the market in a position to actually do anything. And so we had the right mix of customers that had stablecoins natively, a network that realized that there was both an opportunity and a potential threat to disintermediate or take advantage of, and our technology infrastructure that connected A to B. And that was really the beginning of a really great partnership that we've developed with them for the last few years. And now, we're, I think, one of the largest, if not the largest, stablecoin settlement counterparty globally for the network. And, we've been growing significantly with them. Yep. And we're excited about doing even more in the next 12 months with all of our customers and tokens and blockchains, et cetera, to be able to continue pushing the industry forward. And then from the other side of the partnership side, right, is we have great partnerships with processors. We just announced a partnership with Lithic, which is mostly, servicing traditional fintech. We're really excited about stablecoin applications for traditional fintech. And with Lithic, we were able to find a partner that was also similarly interested in moving an industry forward and finding ways to reduce cost and complexity for their customer base. And that's been a really great partnership so far, and we're really excited about expanding that. And it's also helped us because, companies like Lithic are much further along in their journey. They have a lot more resources. They have brand credibility with their clients. And as a smaller company, we've been able to actually leverage the fact that larger companies, larger partners trust us and want to use us as a way to kind of say, hey, we're a reliable partner because people that you would normally choose to work with, they also work with us.
It's really interesting. Like when you guys got started, there was no clarity on a lot of these rules, right? Like even with these partnerships, you were kind of building in real time and figuring it out. And like you said, to Visa's and other people's credits, they kind of worked with you to help craft this together. Many founders look at a regulatory space like broadly financial services, certainly digital currency, as a place that has a lot of regulatory overhang or at least uncertainty, which creates maybe more problems than a startup might want. You guys really took advantage of that in many ways, right? But maybe put us in your shoes of like, how do you think from a founder perspective of entering a space that has no clear rules at the time when you guys were really frankly getting started, and then creating a framework around that which you can operate, and then also bring people like these partners and other folks into it?
Look, I think we were naive enough to listen to our customers for what they wanted, and we were ignorant enough to not know that this was going to be hard.
Yeah.
And so I think those two things together gave us the like the push or the hubris to say, hey, maybe we can figure this out. I think that, you know, a lot of people rightfully think about it as, hey, this is going to be challenging and I don't want to do it. I think the flip side of that is if something is hard to do and you do the hard thing first, it's very, very difficult to undo it or have somebody else do it. And so it's kind of a double-edged sword, right? If you start with the hard, it's easy to do the easy, right? And expand down into the easy stuff. If you start easy, it's going to be harder to do the hard stuff.
Yeah.
And because you're on the easy side, you may never build the muscle to do the hard stuff. Yeah. You may never build the desire to do the hard stuff, right? Yeah. Because for what it's worth, there's a lot of money and a lot of products that you can build on the easy mode. And sometimes that's the right path.
Yeah, yeah.
Yeah. I think for us, like whenever we were going through those hard moments, we're like, okay, getting this license or getting this approval is just really painful. Like we also saw that as, okay, someone's gonna have to go behind us and go through this as well. And if we can just chew this glass and get through this, that's like part of our moat. And especially with AI, like I think founders have to think about the cost of developing stuff is getting cheaper. Like software is becoming less of a moat. You can't be scared of the other hard parts of building a business. Because few teams can actually excel in all these different areas, and if you can, that is your advantage. That's how you get the upside.
Yeah, I want to ask you guys a question, and then one bigger picture question, and then a few personal questions, and then we'll wrap up. I think you guys raised a seed in beginning of 2022. Your next material round after that was your Series A in January of 2025. Almost 3 years of building, right? I think many founders today would be frankly saying, hey, is that too much time for me to be building? Should I be pivoting 3 times in that period? You guys had a very strong vision from day one of where you wanted to go and were able to systematically build into that space, but it took patience, it took trust. How do you think about that now looking backwards? Like obviously it's easy to say that was the only path forward, but there must have been moments in that 2-3 year time period where you were like, is this the thing that we're supposed to be doing? Should I be thinking about something like, just put us in your shoes during that time period of how did you know that the path forward was the right path forward?
I think one of the challenging things was we never had a down quarter at all. Yeah. Like we've never had a down quarter since we started Rain.
Yeah.
And it was very difficult to actually justify pivoting or doing anything different because everything was working. Yeah. It was just working on a pace that when we were looking around, it made sense why it was working on the pace that it was working at because like the government was deciding, well, every builder has nefarious intent. Anybody building anything in America is probably a criminal. And like, it wasn't very friendly to be in that marketplace. And in spite of that, being able to continue growing was important. And we thought, hey, this is actually good. If it's like this and it's like this, then if it's different, then it's probably gonna be better, right? And so for us, it was really important to kind of continue iterating. And the other thing is that on the product side, everything was continuing to get better and stronger and more flexible, more resilient, more capable. And we just got to a point where we had the resources and we just realized if we just kind of see it through, chances are that regulatory clarity will come in because everything was getting looped into the same thing, right? Like stablecoins are very different from floating rate tokens or speculative assets or perpetual futures or options trading or all sorts of these things. And our thesis was that, look, we're just here to focus on this one little piece, which is the lowest risk element of this whole thing. And eventually people are going to start decoupling what's happening from each other, right? And this has happened in every other industry. Like, this is what happened with the internet. Everybody said the internet was for weirdos, right?
Yeah.
And then now we all use the internet.
Yeah.
Because eventually people are like, oh no, internet has a weirdo piece, and it also has like the piece where you can sell stuff and stuff, place where you can publish things and search for stuff. And so maybe those buckets are different, right? And we just assumed eventually people were going to say, well, stablecoins are this bucket, like exchanges are that bucket, like, prediction markets are this other bucket, and then there's a weirdo bucket. Yeah. And that's going to eventually be what happens.
Yeah. And for us, like, fundraising has never been the goal, right? We always saw it as a tool. It's a means to an end. And we had other objectives that we were going for that we felt like we were making progress. So there was really not many times in those building years that we really felt like we wanted to pivot or change anything, because we felt like we were making progress in the areas that we wanted to make progress in. And then the fundraising will come later when we need it to do the things that we need to do.
Yeah. And the interesting thing is that I think the collective thesis, even when we were first speaking, was at some point regulation is going to come, and most likely, if you look at this space objectively, the benefits for consumers, for stakeholders, is going to outweigh any negative but it took time for people to sort through all the different buckets. But if you believe that was going to happen at some point, and we hoped it happened sooner than later, that world was coming, but we didn't know what the time frame looks like.
Yeah, I mean, and it was encouraging to see, right? Like, Mika came into Europe. People started moving, like countries started developing their own virtual asset authorities, and in a hopes of actually taking this mantle from the United States. And our government was like willingly letting it happen. And ultimately, I think people realized, well, why would we compromise our position in this world economically by letting people have the right to hold or issue US dollar products? And when that started gaining vogue, we saw that the market shifted, like the regulatory space shifted, and people were like, well, this is probably something we don't want to relinquish our control over or our place in the world on. And that was helpful. That was encouraging to, like, as a taxpayer. It was good to see that like our representatives and our leadership in the country are actually thinking about like our place in the world from an innovation perspective. Yeah. And we're getting out of their own way to try to build a future where we can believe that American can have a larger role in the world rather than a smaller role in the world.
Yeah. No, I love it. I think the two things that I take away from the Rain story so far that's been written is, one, just the thesis approach to saying we believe this is going to be the future state in the world, and how do we start to build for that world? And then the second piece of it, which I think is, how do you actually create the right milestones to be able to achieve that, right? Not just thinking about the end state or just today's state, but constantly thinking about how do we get to the next levels. So today, a lot of people don't know all of this, but Rain is powering big financial service industries and companies, large traditional companies, consumer companies, obviously digitally native companies. State governments are coming and partnering and working with Rain. What does Rain look like 5 years from now? Where are we headed?
We think that the financial system wholesale is changing. Money is getting tokenized. If you think about what that means, it means that every single piece of the financial enablement stack needs to be upgraded. Every single banking core needs to be upgraded. Every single Swift terminal needs to be updated. Every single thing that moves or touches or exchanges money has to be upgraded. And that opportunity is a massive one. Like, if you look at who are the dominant players in like banking core software, that entire industry needs somebody to come in and build new technology. And these are all multi-billion, tens of billions, hundreds of billions of dollar companies that are going to have to figure out what this means for their business. And the challenge with technology change and the opportunity with technology change is that if you have built a market position maintaining 40 years of technology, legacy technology, it is very, very expensive to throw that away and start all over again. And time and time again, if you look at, even in the Bay Area, you look at Cisco, you look at all these companies that were able to be massive businesses as the internet came in, as mobile phones came in. They were not the winners in the previous landline world. They were just able to win because their tech was lighter weight, faster to install, and people used it, right? And so our bet is a very simple one, which is that by engaging with our partners to build solutions for all the ways that their customers move or spend money or hold money, we are building a technology center of excellence where we can help other people navigate what the future of this means for them. And for us, that's been very important to start engaging with partners. And, for us, our ethos is that we're happy to talk to you to help you figure out what this means for you. You don't have to buy anything from us. We're happy to help you figure out like where we see this potentially impacting you, where we see this probably doesn't impact you, and have a very frank conversation. And I think the level of conversations we've had so far with like public company CEOs and other folks is that they appreciate that we are bringing experience for what this means today, and we can help them understand what it means for them tomorrow. And I think we hope to do more of that.
Yeah.
And if you're listening, you should let us know.
Yes, absolutely. Reach out. I want to ask you guys two personal questions. Both of you, this has been one of the fastest growing companies that I've been a partner to, and clearly you guys have grown magnitudes even in just the last year, let alone 2 years. Your job as founders and leaders of the organization has drastically changed, right? We talked about a lot of the early days of innovating, testing, being on the customer service calls, et cetera.
We're still on all of those.
You're still on the customer. Unfortunately, you still probably are on the customer service calls. But tell me about how have you mentally started to think about your change in your roles, if it's changing, and how would you kind of think about that in this new context of a growth stage company?
Yeah, it is actually a very interesting space for us to be in right now. I'll speak for myself, but the decision tree now, as the company scales at an order of magnitude, even from the last round, it's just very different. You have to make decisions very differently. We're very capital efficient people. We try to be thoughtful about how we spend resources, but as companies scale, you have to spend ahead of the need a bit, especially as you're growing so rapidly, because hiring the right people, training them properly, making sure that they're able to provide valuable insights as the company is growing, it takes time and it takes attention and it takes resources. And so making sure that we're able to think about what's coming beyond this next spurt of growth is very important. And then investing and making sure that we're making the right calls and powering up the right people and giving them the right autonomy is actually really important. And all the decisions now are actually very different from all the decisions even 12 months from now, 12 months ago.
Yeah.
And the decision matrix again now is just very different from I'm having to make the opposite decision of what I would have made 12 months ago.
Right.
And it's still both were right. That was right then, this is right now. And that's been kind of the largest challenge, code switching between kind of sort of hyper growth mode and growth mode.
Yeah.
And I remember reading this book a few years ago. It was from the 1970s about it's called Inside the Tornado or something, I think. But the whole book was about all of the mistakes people make is they keep making the same decisions as companies hit different inflection points, and eventually all of the decisions that were right are now wrong. And that's kind of stayed with me. And so now I'm just we just know that our gut is going to be wrong a lot of times.
Right.
So it's getting out of your own way is the most important thing. And just relying on the people that you work with and trusting them to make the right decisions is actually the most important.
Yeah. As CTO, my role has changed a lot. When we were a small team, a lot of my time was actually hands-on coding, talking to customers, iterating. As we grow, that's less and less of the way that I can add the most value to the team. So going from being one of the top contributors to the code base to barely being able to do a pull request every few weeks is a big mindset shift. But when I think about what are the things that I should be spending my time on to give leverage to everyone else on my team, just coding is becoming less and less, and it's more about recruiting and mentoring and architecting and guiding the rest of the team to perform their best. So it's a big shift. but it's needed to really scale the team and make bigger impact.
It's almost a new role. Right?
Yeah, it's a completely different role, and a lot of times the same person is not best for both those roles. So hopefully, it's,
Keep learning and keep growing, right?
Exactly.
Last question for both of you. There's always probably been somebody who's had a major imprint on your journey so far, not on Rain in general, but just on your personal life journey and professional journey. Tell us about that person. What did they do for you? How did they impact you?
Yeah, like I think obviously, I mean, this is a bit of a cop-out answer, but my parents have had a big impact on my life. They just gave me the conviction and just told me I could accomplish whatever I wanted. And that's kind of been my approach to life, which is that just because it looks hard doesn't mean it is. And the only way to find out is by doing. And that's really why we're here, right? Like that's why I'm here, which is because I've just tried different things and I try to do things that I find interesting and see it through the end. And that's a big, contribution that my parents have given to me on how like I think about the world.
Amazing, incredible. Charles?
Yeah, I mean, of course, my mom has been a big influence. But besides my parents, I would say actually my old boss at Intuit, Trisha, I just learned a lot from him on how to grow an engineering culture, how to deliver excellent products, how to just get stuff done, how to cut through noise, how to build in like a bureaucratic place, and also how to lead by example. So being a strong engineer, but also being a strong leader.
Amazing. Well, thank you guys for being here. This is an incredible conversation. I'm so happy to be sharing the Rain story more broadly. I think it's an incredible, lot of lessons for a lot of founders to take in terms of just being driven and thesis approach to building something massive and impactful, and just been a privilege to be a partner to you guys from the beginning. So excited to see where the next couple of years go.
Yeah, we're excited to have you supporting us and continuing to.
Thanks, guys. Awesome.